There has never been a worse time to retire, says my man Ron Sears. Now, I am a big fan of Ron. In fact, I'm going to do another video on this. This is just a great piece right here. I love this. I just love the data stuff. I'm a geek. I could not disagree with this more. I mean, he might be right. We don't know, but we're just. What are you doing, buddy? I love my dogs. All right, so we're just going to go down here. The risk of loss in normal times becomes the risk of ruin in the risk zone. The risk zone is the 5 to 10 years around, the sandwiched around your retirement. So your retirement's here 5 years before, 5 years after. I completely disagree with that. I mean, I think there's just like these stocks for the long run. Jeremy Siegel talks about, a lot of people say if you hold for a certain amount of time, you won't lose money. But the long run never comes, man. You're always in the short term. So if I invested in 2000, yes, I never lose money in 2020 from 2000. But those days are behind me now. Now I got to go for the next 3 years, next 5 years, next 10. The long run never here. You know, so like CCR, someday never comes. I'm here to tell you now, each and every mother's son, you better something fast, you better something run. Anyway, I'll probably get demonetized for that because that was a serious recollection of John Fogerty right there. All right, so let's see what old Ron's talking. Look, just because I disagree with him here doesn't mean he's a bad guy. It doesn't mean he's evil or anything like that. It just means I disagree with him explicitly. And again, because the long term never comes. That's not what he's saying here. What he's saying is the risk of retiring right, in the next between 5 and 10 years, your retirement is being sandwiched by the risk zone. We're in a bad place right now, and he might be right, but that the risk of not retiring, in my opinion, is much, much higher. I heard Finney griping. All right, for 2 years now, Sears has been sounding alarm that boomers are in the retirement risk zone. And see, this is the problem, man. For 2 years, what did we miss out in 2 years? The S&P 500, what did it do the last 2 years? It freaking kicked butt, man. We just don't know. A period that imperils their hoped for golden years. So how many people listened to Ron 2 years ago and missed out on some of the biggest gains we've ever seen? We'll go into that here. Actually, let's just look. So in 2000, I love this one of these. I'll show you here. 2020, we were up over 10%. In 2021, we're up over 20%. So, I mean, that's. You can't miss these years. That's the whole point about staying in the market is more important than time in the market is so much more important than timing in the market. If you miss the good times, you're screwed, man. You can't miss it. You gotta stay. I gotta do another video on that. It's been so long since I did a video on that. The risk of loss in normal times because the risk becomes the risk of ruin in the risk zone. In the interview, he discussed the threats to boomers' retirement against a backdrop of 70% of the cohort having less than $300,000 in retirement. That's simply not true, and I'll share with you why that's not true. He contends that boomers aren't getting the most advantageous retirement planning advice from professionals. The target date industry is failing people. Well, wasn't he who did the video on the target date funds? Yeah, right here. The target date funds with long horizons and moderate risk earned double-digit returns in 2021 as they did in 2020. I mean, the target date industry is failing people? I don't know that. Let's see. He has managed target date funds for 401k plans. All right. Okay, let's keep going. It's a perilous time. There's never been a worse time, he says. We'll be lucky if the baby boomers make it through the decade without suffering a big market loss. I don't understand that. We got smoked twice in the aughts. So we didn't get smoked at all in the teens, well, just inherently because we got smoked twice in the aughts. We get smoked every 5 years on average. I don't understand that. The 70s, we got smoked twice. The 80s, we didn't get smoked other than 87. That's tiny. That was like last year. In the 90s, we didn't get smoked either. So basically, the 80s and the 90s, we didn't get smoked at all. But in the 70s, we got smoked twice. And the aughts, we got smoked twice. And so this decade, previous decade, we didn't get smoked at all. So I don't understand that, man. Every decade, we get smoked in some capacity. And when I say smoked, it's a 25% decline at least. I don't know. Has there ever been a decade where you retired not thinking you could get smoked? I don't think so. I mean, if you think you're not going to get smoked, a huge market sell-off, I think you're crazy. We're living in perilous times. We've never had so many people simultaneously in the red zone, the risk zone. Let's see. There's never been a worse time. If you're lucky and make it through the risk zone without losing money, what is that? So, is the risk of being down in your portfolio? I had a guy email me just 2 days ago, and he didn't want. What did he say to me exactly? I said I can't remember, but I forgot what it was. But the whole point was, what was he saying? He didn't want to touch principal, and I said I don't understand that, man. He said he didn't want to sell shares. He just wanted to live off his income. But he didn't say it like that. But it's like, I mean, okay. But if your income, you're going to have a lot of shares to generate the income you need. What's wrong with living off principal? I don't get it. What's wrong with dividend and principal? I've never understood that. The 4% rule assumes you dip into principal. Everything assumes you dip into principal. If you just want to live off your dividends, you got to have a hell of a lot of money to get a dividend that pays you when the markets are, the average dividend yield is what, 2 to 2.5. $1 million pays you $25,000. Well, I have a higher dividends. If you have higher dividends, the only reason you're doing that is because you're taking on more risk. That's just a fact. Or there's no growth potential in there, just none. Preferred shares come to mind. You could do that, but it's basically a fixed income on dividends. Nothing inherently wrong with that, but don't tell me a higher dividend than the S&P 500 is better because of you get both the growth of the S&P 500 and a higher dividend. It doesn't work like that. You have more risk. Value stocks. I have almost all my portfolio in VTV is more risky than the S&P 500. The reason why value stocks have outperformed because they're more risk. That's why they're value, because the price has dropped, which is why the dividend yields are higher. There's a reason the price has dropped. The reason the PE ratios are lower, because they're more at risk to keep going at. That's why they're value stocks. They've taken on the chin for whatever reason. All right, let's keep reading. There's a couple things I take issue with. All right, there are 78 million baby boomers. We were talking about of those. 70% have saved less than 300,000. But if they can live on Social Security in some states like Arkansas, they can rent a decent place for $300 or $400. Except that might not be what many boomers would choose for retirement. So I think he's being facetious here, being a little sarcastic. If you can live off Social Security, you can get a decent place in Arkansas for $300. He's trying to make it sound like you're going to be poor. And I want to show you guys something. We're going to take our trusty calculator. All right. We're going to say we're getting $2,500 a month off Social Security, which is $30,000 a year. So we're going to say $30,000 a year is our payment. We're going to put a negative in front of that. All right. We're going to say we have zero future value. We're going to say it's going to grow at 2.4% cost of living, which is what the Social Security Administration says. We're going to do this for 25 years when we die. And what is our present value? Our present value is $572,000. That is essentially what you would need to generate a $30,000 annuity, a cost of living adjustment of 2.4%. Does that make sense? So if you have $300,000 in your portfolio, all right, you also have a $572,000 annuity essentially. You can't roll it over, but it's guaranteed with a cost of living adjustment, which is tax favorable as well. All right, so stop this. People only have $300,000 to live on. They don't. That's $2,500 a month in Social Security. That's $30,000 a year. All right, so if you had $300,000 on top of that, you took $15,000 off that every year, plus your $30,000 annuity called Social Security. That's $45,000 a year right there. You know how much of that's taxable? I don't know if you're married, none. I think if you're single too, maybe I should do a single thing and see how much of that's taxable. I'll talk about it. I can't remember. But anyway, point being is, yeah, you can probably do okay. You're probably doing okay. I just don't understand that, man. Interest rates have never been lower. That's bad because people who want to save can't be safe and make money. Well, if you're living off your portfolio, you're not really saving anymore. I mean, I get it. You're saving, you're investing, but I don't get that, man. It's just interest rates have never been lower. I mean, I agree with that, but the reason interest rates are so low is because supposedly inflation was low. I don't think interest rates are ever going back up very high. I just don't. There's too much debt. The federal government has every inclination to keep the interest rates low, be it through buying bonds. I don't know, but I mean, when you have this much debt, you can't afford higher debt payments. So I'm not expecting interest rates to go up anytime soon. I mean, a little bit, but not much. Not what it used to be. The average 10-year Treasury is like 5.5. Stock prices have never been higher. Well, that's the perpetual stock prices are always higher. I mean, just drives me up the wall. Stock prices were I guess I do. Where's my I don't have my phone. If you look at the S&P 500, stock prices in 1970, stock prices in 1980, stock prices in 1990, stock prices in 2000, stock prices in 2010, stock prices in 2020. They're always higher. They've always never been higher. That shouldn't shock people. So the history of the markets are the market goes up, takes a loss. It goes up, takes a loss. The gains are permanent, the declines are temporary. I can't guarantee you that, but if you look historically, that's what happens. So inherently, the stock prices are always higher. I never understood this. The market's too high. Like, well, we've never ever printed so much money. All right, well, I agree with that. Japan has never ever printed so much money either. So the government spent more than twice what we spent on World War II if you turn all those $1945 into $2021. Okay. I mean, I know everyone says this is hyperinflation. Well, if that's hyperinflation, you know what the Fed does to combat inflation, which I find silly, but they raise the interest rates. Raise the interest rates. What does that do to Fed spending? It makes them have higher interest rates in which they got to pay the debt on. So you don't think the Fed, I mean, look, the Fed knows this. I'm not saying they're smart. We should audit the Fed. We should get rid of the Fed 100%. I completely agree with Ron Paul. But this is the game we're playing in right now. There's limits to what they can raise the interest rates to, just inherently because so much debt is out there for sure. Don't forget, we own most of our own debt. I just want to point that out too. All right. The wealth divide has never been larger. Okay. I don't disagree with that. I just don't know what it has to do with you retiring today. That doesn't make sense. We've never had so many people retiring. Okay. Market correction is on top of the list. Well, market correction, I mean, it's just a 10% decline. Threat of nuclear disasters. Oh, geez, Ron, are you one of these guys? By North Korea and Iran. The Federal Reserve entitlements running out of money. The world debt crisis. Baby boomers being the risk zone. COVID and trade wars. What can I do? At least look at the risk they're taking. Solutions like a 60-40, blah, blah, blah. What do you consider probably treasury, inflation, securities? He likes tips, precious metals, crypto. Oh boy, he likes cryptos, commodities, farmland. All right, so how's Mrs. Smith there in freaking Tempe, Arizona, going to get some farmland with her less than 300,000, Ron? How's that going to happen? Give me a freaking break. I mean, look, I like Ron. This is what she can invest in commodities, farmland, crypto, precious metals. I mean, let's see. Beware that most investors in target date funds are people that know how to invest. You don't know that. I mean, you simply do not know what you're talking about there. How do you know that? Have you surveyed them? Do you know? But I do agree with, let's see, the target funds, 65% of the $3 trillion is managed by just 3 firms. All right, so Ron, see, this is kind of like he's saying, look at me, I manage target date funds, and my biggest competitors are Vanguard, T. Rowe, Fidelity, COVID. All right, I mean, I get that, but the biggest oligopoly is Vanguard and BlackRock. I'm not sure if he talks about that. This whole thing is weird to me. All 3 have excessive risk at the target date, in my opinion. Okay. Surveys have shown that employees think their 401k money is guaranteed. Where I'd like to see those surveys. Where are those surveys? I'd like to see them, frankly. I've never. Do you think your 401k money is guaranteed? Does anyone? I'd like to see that survey. All right. I'm anti-excessive risk at the target date. My target date funds it's kind of like a 28% risky assets, 80% treasury bills and tips. This is almost like a sale pitch to get him to compete against the other firms for target date funds. Stop clock and all that. And maybe he will be right at some point. I find this whole thing to say the vast majority of retirees don't have enough money to live on. They have to live in a $300 or $400 apartment in Arkansas. The markets are too high, all this. Okay, so what do you want people to do? Invest in commodities and farmland, crypto, keep working? I mean, let's focus on the thing you can control, your expenses. Focus on that. Once you get over that, and then we can look at the other things. But until you focus on your expenses, everything else is out of control. All right, love to hear your thoughts. We'll see you.